Have you ever opened a chart and you see markets going up or going down or moving in a sideways? So the answer is in the one of the most important concepts when it comes to trading, which is market structure. And before you learn about any indicator, any strategy, any pattern, you must first understand how markets move. Because if you can't identify the trend, you are basically trading blindly. So in this video, I'm going to explain what market structure is, how to identify trend, and what higher highs and higher lows means when it comes to market structure. What is market structure? Market structure is the behavior, condition, and the current flow of the markets. So which means market doesn't just move in a random way. Markets move based off structure. So, and price create a pattern as it move to the upside, move to the downside, or moving in a sideway. And by understand those patterns, it's going to help you to identify the current market direction when you have the understanding about market structure. And we cannot just, let me just use this simple analogy. Look at market structure like you are climbing a staircase. If every step is higher than the previous one, so that means you are moving to the upside. And if every step you take is lower than the previous one, that means you are moving downward. So same thing happens when it comes to forex markets or any charts entirely. And markets can only do three things, which is either market is going up, or market is going down, or market is moving in a sideways. So that means we have three type of market structure. So three type of market structure. So the first one is bullish structure, bullish structure, which you can also know as maybe trend up, which means the trend is going to the upside. So why the second one we have is bearish market structure. So which means trend down when the trend is going to the downside. And the third one we have is known as sideways markets structure. So the sideways can also refer to it as choppy markets, or you can also call it consolidation. So when market is consolidating, it's also same thing as sideways markets, or you can also refer to it as range markets. So you can use any one of those words for sideways market structure. So those are the three type of market structure that we have. Now let's take a look at the first one, which is the bullish market structure. So bullish market structure is when market is creating highs. So when market is creating higher highs and higher low, what does that mean? Anytime you see markets creating higher highs and higher low, that is how you can identify a bullish market structure. Higher highs and higher low. So this is for bullish market structure. So what does that mean? So now you see we have this, we have a high here. We have a high because when you see the market move, it gives us this high. That is the first high. And it's come back to give us a low. So after that was created, price now move and it break this high to create new high. So we're going to label this as high because this is just a single high. We don't know where market is coming from, but we know that okay, we have this high. This is our first high. And we have a low. So, but let's say before price creates this new high, Firstly, here you cannot decide maybe what market wants to go to the upside or it wants to go to the downside, because market can just do something like this and it's break this little to give us lower low. But when price now take out this high, that is when we now have what? Higher high, because this particular high is higher than this previous high. So that is what higher highs means. When a high was created and it was higher than a previous high, so that is what higher high means. So we now have higher low. So this is a higher low here. But so the reason why we call this higher low is because this particular low here, it was higher than this previous low that we have. This low is higher than this previous low. So that's the reason why we call it higher low. So we have higher high and we have higher low. So if price continue like that, that means price is in a bullish market structure or bullish trend or trending to the upside. So anytime you see price creating it, breaking highs and respecting low, that means price is in a bullish market structure. So that signifies that price wants to be going to the upside. So now you can just define a bullish market structure as when price started giving you a series of higher highs and higher low. So these movements that we have here is what we know as you can call it pro trend, you can call it impulse move. And why this move here that create this higher low is known as pullback or a correction or a minor trend, because this is the main trend, which is the pro trend. So we have a pullback, then price continue to give us another words impulse move, which is our main trend. Then we have a pullback. If this pullback, can call it minor trend, you can call it um a correction. Then we have another pro trend, which you can also call a impulse move. So a bullish market structure is when the price starts give you a series of higher highs and higher low. So that is that for bullish market structure. So for bearish market structure, so a bearish market structure is when price started giving you a series of when price started giving a series of lower high and lower low. So firstly, we have a low here, right? We have a low, we have a high, and price can decide to do something like this after price create this low and price create this high. Price can decide to do something like this and start giving you us higher high. But in this case, price take out this low to create was a lower low, a low that is lower than this previous low. So that's the reason why you call it a lower low, because this low is lower than this previous low. Then price create a high that is lower than this previous high. So that's the reason why we say that a bearish market structure is when price started giving you a series of lower low and lower high. So a formation of a lower low and lower high is what gives you a bearish market structure or a bear trend down. So anytime price is giving you a series of lower low and lower high, that is when we have what? A bearish market structure. So formation of lower low and lower highs, bearish market structure. We have lower low and lower high. We have another lower low here. And then we have lower high. We have lower low. Then we have lower high. So anytime you see price creating, it is breaking lows like this. It's breaking lows like this. That is a bearish market structure. And what happened when price take out this high? When price break this particular structure here in this bullish market structure is what we know as break up structure, because price break this high, so that is what we know as break of structure, which is BOS. Same thing here. When price take out this high, we know it as what? BOS. This is what we know as what? BOS. So when price take out this high, also is what? BO, break of structure. Break of structure. And when price take out this low here, we have a break of structure. When price take out this low, we know have a break of structure. When the price take out this low, we have a break of structure. And same here, we have a break of structure. So now let's move to the third type of market structure that we have, which is sideways market structure. So what is sideways market structure? Even from the name or this name that we write here, which is sideways structure, choppy consolidation ranging, you should have an idea of what that means. So what it means is that when price doesn't have a clear direction, so it can give you high like this instead of, and still do something like this, come to take out this low and come here, do something like this, break this high again. So in this case now, you see that this doesn't give us a clear higher highs and higher low. So this is kind of confusing, and that is the reason why we call it a sideways market structure. So price was ranging at in a from one zone to another. So anytime you see price giving you a relative equal highs and relative equal lows, that is when price is in a ranging market. So you are having equal highs, but it's not necessarily means it must be equal. That's the reason I say relative equal high, and you are having relative equal low. So anytime you're having relative equal highs and equal low like this, that is a ranging market structure or a consolidation or a sideways. But anytime you don't have a clear direction that you cannot particularly tell, maybe price is creating higher highs and higher low or lower highs and lower low, that means market is in a sideways market structure. So that is the three type of market structure that we have, which means price cannot do beyond these three things. Is either market is going to the upside, or market is going to the downside, or market is in a ranging condition. So, and when I don't want this video to be too long, so I'm going to make another video about break of structure and market structure shifts or change of character is the same thing. So I'm going to make another video for you to know, to understand better about this break of structure, and when trend want to change from a bullish to the bearish market condition, or when trend want to change from a bearish to bullish. So stay tuned and watch the next video that I'm going to upload about this break of structure, where I'm going to explain what break of structure means which I've already tell you here, but I'm going to make another video and show you chart example of it. If you have not subscribed to this channel, make sure you like this, comment, and subscribe so that you can get updated anytime I upload a video like this.